And Alan Nuckman, who's joining us, the chief market strategist at Agora Financial. He's down at the CME. So, Alan, which way are you going here? You want to ride gold or stocks? Because it seems like this is just a little bit of a reversal we got.
How about all of the above? Okay. Everything's going higher. Everything. We've got the dollar up at new highs. Let's talk about that in a minute. We'll talk about that in a minute. Stocks made new highs, what, yesterday?
2 days ago.
It's only been a couple of sessions, and you've got gold at 7-year highs, and even crude oil's bottomed out and holding above the 50 level, got close to that halfway point at 55 yesterday. So it's a very unique situation where everything's heading up, which doesn't make sense, but that means there's opportunity. Let's sort it all out and take some prisoners and make some money.
All right. So look, you've been a very solid, accurate bull in this market as it has kept rallying. Have you changed your mind at all? Are you getting worried about how much just explosive bull momentum is in bonds and gold right now? Is that a bad sign for stocks?
All right, let's look at tech. Tech is up 10% in 2020 alone, and the S&P was up 5%.
Not anymore. It's like 9.
We backed off just a bit. Okay, 9. Okay, that's close enough. I round up. So the markets are still strong until proven otherwise. We've got a bit of a pullback. We still made new all-time highs on a weekly basis this week.
No doubt.
We're going to stop it. We're going to have a 2-week streak of positivity negated here today. So we'll see how it responds. But I'm still with the 3,500 target that I've talked about for weeks and months, and I guess going on years now in that S&P, which is a V recovery from the drop that we had in December of 2018 on that old high. That target's 3,500 in the S&P. I'm still sticking with that as it stands right now. And look at what also continues to make highs. Treasuries, as far as price goes, which is sending the yields down to new lows, meaning why is money going to get shoved into treasuries unless there's a catastrophe? Why are you going to shove money into treasuries at these levels? It doesn't make sense. There's no choice. We've been talking about that. Until there's a choice, the money's going to continue to go into stocks, and that's going to be where the yield is.
All right. Unless, Alan, this time there is a catastrophe. I'm hearing the word black swan get thrown around a lot. Nobody saw this thing coming. It's going to be like now a year, I'm hearing, that nobody's going to be able to get the chips they want. They're not going to get the parts. You miss one little gadget and the whole world falls apart. I'm not trying to be sensational, but this is really what some smart people and economists now are warning about. So, I mean, is bonds going to be the better return? They just passed stocks on the 1-year percent move.
But there are better traders than you and I, and guess what? The market's not
definitely better than me.
That. And so the market knows all that. And you're not even talking about black swans. We're talking about white swans. These things are walking right down the street. We know exactly what the issue is. No surprises here. We know that China's an issue as far as trade goes. Do they follow through? Does this get done? Does whatever? Do we continue to battle? We know the Mideast is always a tinderbox. And we know, obviously, this medical issue is right out in the forefront. But look at where the market is. It's equally as important to see what the market doesn't do as opposed to what it does do. And we've been going down this road for 2 weeks, and the market's held very strong, continue to make new all-time highs, and continue to go until, like I said, until something changes fundamentally. I think this is the path we're on. We're going to have profit-taking pullbacks, along the way. That's natural, but that's opportunity, and that's something that we need to take advantage. Let's get back to the dollar, because I know that's your latest worry.
Did I just hear you say the word fundamental?
But until things change
fundamentals, how are earnings going to make it?
Until they change, because they don't change. Because they don't change. Until they do change, we're going to continue on this path. But let's get to the dollar, because I know that's your latest worry, right? We're at 100. Or we're very close. Not
my latest worry. Actually, the way we've covered the dollar here is that the higher it goes, the more likely the higher stocks are going to go, because that dollar's basically signaled the TINA trade for like a year. And heck yeah, it is working, baby.
It is, and everybody's been looking for the dollar turnover, as have I, and it hasn't happened. So there has not been that normal retreat in the dollar that would be positive for stocks. But if you look at it, it pulled back. All right, the dollar at 100. The 20-year trade for those last 20 years in the dollar index has been at 120 highs. We were at 120 back in 2000, and then we were down at 80. So 100 is the midpoint of the action for the last the last 20 years. And we were at 100 just here in 2017, and that didn't stop the stock market at all. So I think the dollar is another issue that we can ignore. But look at the facts that, the markets are telling us that there's about a 60% chance there's going to be a rate cut by July and a 90% chance by the year end. Now, the markets, the market prognosticators and the analysts are not expecting that, but that's what the markets are telling us. So again, I always default to the markets. The markets have it right more than they have it wrong.
All right. Alan, we got to run. Nice. I like it. Always a spirited convo. Mr. Nuckman joining us from the CME.
See you on Monday.
Yes, sir. You got it. I will see you then.